What impact do you see this, this margin, this increased margin, having on Nigeria's FX space?
For the increase in volume-wise, CBN has increased its sales and also reduced the rates. I see rates are going to trend downwards. The BDCs are now happy, their prayers have been answered, so they get to make more margins. But with the restriction on selling above 360 levels, we see rates are going to chase down towards 360. If possible, excess funds may even reduce it further. So with that, I see parallel market is going to trade along the 360 to 361 maximum as long as this goes on.
I was just going to ask you how long or how soon do you think this is going to happen? And two, I mean, in the last few weeks ago, we've talked about the pressure at the I&E window, foreign investors, FPIs repatriating their funds, and the CBN trying to, match supply with demand. Help us understand the state where we are with that and how this new development affects that.
Okay, on the I&E window, we saw there was a bit of relief in last week as we saw some fresh funds come into the market. So with that, rates trended downwards from the 363, where it was originally trading, back down to about 361. So there was a lot of pressure relieved in that window. And this is also comes at the same time CBN actually increased sales to the BDCs. So with all this, we've seen excess supply come back into the system, and we see rates going to trend downwards towards the 360, 361 levels. If with everything going on now, we see liquidity has improved.
Okay, so I know foreign investors, or lots of analysts say that foreign investors would like to see free markets or a free exchange rate, a floating exchange rate to do with Nigeria's forex policy. But what do you think investors make of this? Because even though they have increased liquidity in the markets by intervening and they've encouraged BDCs to keep selling by increasing the margins, it seems like some more intervention. So what do you think investors will make of these moves?
I think right now investors, I think they're actually comfortable with the market for them to have come back in. With the last week, the inflow of liquidity, I think it's where we see it performing in the stock market, with it making gains once again. But on the fixed income space, we don't see them playing that much. For rates need to go up for Nigeria to attract more investors into the fixed income space.
Well, let me quickly take you back to the FX once again. Now, I mean, while what the CBN is doing is commendable, I mean, it's good to always have good supply at the market. I can't help but think about what's going to happen in the months ahead when we go into the election cycle proper. We know, I mean, typical of an election year, we know that there will be more dollars in circulation, and there might be pressure at the parallel market with people, for one reason or the other, or for whatever reason, demanding more dollars. I'm just trying to understand what's going to happen then. Do you think the CBN might take a different approach then to ensure that there's still stability at the FX market?
Yes, I think in the coming months ahead, with election looming around the corner, yeah, we are going to see a lot of pressure on the dollar as we are going to see a lot of flight on the dollar. And yes, I see CBN coming with a new approach to defending the dollar as against what they are doing right now, which was injecting dollars into the street. I see more direct intervention into the I&E market, or more direct sales in the retail and wholesale market to help ease some of that tension we are going to get.
Okay, so now let's move on to the fixed income side of things. I know that a savings bond was declared by the Debt Management Office recently. How is this faring?
On the savings bond, we see on the fixed income market generally, we see rates are actually at around the 12 to 13 levels, but there is no urgency in buying bonds or bills right now.
Okay.
We probably think rates are not attractive enough for investors or new flows to get into that market.
Okay, Deinma, we're going to have to leave it there.